slides, and I'm going to make this presentation available online. I'm going to spend about 5 to 10 minutes on the slides. We're going to jump into some charts of things I think are setting up for next week that, or at least look interesting. So placing conditional orders. Conditional orders, okay, how many people trade Think or Swim here? Okay, how many trade Fidelity? Active Trader Pro. Okay, let's see. Schwab has something that's like Active Trader Pro. Street Smart Pro. Street Smart Edge. And regardless of the platform you trade, learning how to use that platform is exceptionally important. Because, you know, the one thing that I like about Think or Swim is because it provides both a live money, for real money, and a paper money account. And so it allows me to do test trades with the paper money account. So it gets me used to putting in, you know, conditional orders and that kind of stuff. If I fat finger a trade and buy when I should be selling or sell when I should be buying on the paper account, and the trade doesn't turn out well, I can immediately either swap it out, or if I come back the next day and it went really bad, I can reboot, and all of a sudden all my money comes back. So I like doing that with a paper trading account because, let's face it, you know, with your hard-earned cash, you know, it's frustrating for it to leave and not come back, or and you can't just reboot at the end of the year and go, okay, I'm back up to $100,000 or whatever your trading account size is. And so, like I said, I practice a lot, and I test systems out with that system. Let's go. I want to remind everybody that material. And I want to thank Lyle for that presentation. We all have, the way we're wired, we all have these little foibles when it comes to dealing with money. And I commend you guys for being here today because, you know, let's face it, you know, I'll bet your neighbors aren't, you know, they probably go to you and say, hey, what do you trade? If they know you trade stocks, you know, do they ever say, you know, they ever go to you and ask for a tip?
Yeah.
Huh?
I've had people come over.
Yeah.
Tip. I'm like,
yeah. And so I just had some new business cards printed up, and it's for active trend trading. And on the back of the card, actually, it has my new address and all that kind of stuff. But on the back of the card, I put a little thing to join me for my How to Make Money Trading Stocks free webinar every Friday. But at the bottom, it says, register here. And it's not an easy website. I mean, because there's a lot of numbers and things like that that go into making up this website. They'll take you to a little sign-up sheet, right? Well, I figured if they're not smart enough to get to where they could put this in and have it the right thing pop up, I probably don't want to help coach and teach them. I mean, that's me. I mean, because I've had lots of folks who, somebody mentioned it earlier, they don't like to plant the seeds to make the flowers grow and nurture the plant as it comes up. They just want to come along and cut off the flowers. Huh? Yeah, that's it. I mean, they want to cut off the flowers and away you go. And so you guys are putting time in on yourselves. And let's face it, you know, to become a good trader, they say it takes about 5 years. For really intelligent people, it takes longer. Especially engineers, double it. No.
10,000 hours.
It takes, it does. It takes time. It takes dedication, and it takes just, you don't have to try to do it all at one fell swoop, but a lot of times, because we are kind of fast-paced here in the Silicon Valley, is we do try to jam everything and learn as much as we can, and rather than just taking a bite at a time, and we get confused. And or we give up and say, I'm not going to learn anymore. I'm just going to do a little bit, but then sometimes that little bit, we wind up doing the wrong stuff. Let's move along. So designing trades, that's what conditional orders are about. One, it has to go back, I think it goes back to the 5 pillars of active trend trading, where you identify what to trade. That's when I only trade index ETFs and or their leveraged counterparts and stocks that are listed on one of the IBD lists, IBD 50 or some of the other products that IBD comes out with. And the reason I do that, not because they necessarily have the best list in the world, and there is a couple of exceptions. I do trade a lot of Tesla because I love the Tesla patterns. They're great. But I don't like doing fundamental analysis. Bores me to tears. I'm a technical guy. I read charts. And so I want to make sure that a stock has passed a certain threshold fundamentally so that I don't have to worry about, is it growing or this type, is its earnings growing, all that kind of stuff. I don't have to worry about that. And then when you get in, when you get out, what strategy to use and what to expect. But it's more. Design trading. It's an intuition based on many observations that help provide an edge as to what to expect and what to do when what actually happens is different than what's expected. Because oftentimes, and this is really strong for guys who love to do guys and gals who like to do technical analysis, you become very adept at doing the analysis, but you can't let go of it. I did my analysis, stock is supposed to be going up, and it turns out it doesn't go up. We'll sit there and we'll hang on to our, people will have to tear that stock out of our cold, dead hands before we'll sell it, even though it's gone against us 10, 15, 20%. So we have to be able to, in technical analysis, say, hey, it's wrong. I'm wrong at this point. And the one mechanism that I've found to be able to do that is to use a mechanical system. It helps me get over both my impulsiveness and my emotionalism of one, all the things that Lyle was talking about earlier. Conditional orders or contingency orders is what some people call them. It's based off of the orders you design after doing your technical analysis of the stock or ETF. Basically, it is, in a way, telling the market, here's where I want to get in. These are my conditions. If I get filled, great. If I don't get filled, great. You don't care. You've defined what battlefield you want to fight on for that particular stock. Some people like the IBD system is based on what? IBD system based on breakouts, right? I'm a terrible breakout trader. I hate it. Because what happens when you do a breakout? Typically, you're going to get a return of somewhere between, 5%, 6%, and so the pucker factor starts to set in. And what's your stop loss? 7 to 8. Well, I don't want to lose 7 to 8%. And so I would rather get closer to where I'm going to stop out to enter a trade so that, does that make sense? Because then I'm risking maybe 3, 4% maybe. Max. Huh? And I still have a similar type upside, right? If, in fact, my analysis is right. Defines where to enter, where to exit, and it provides me peace of mind because in one conditional order, I have, here's the conditions that are going to get me into the trade, and at the same time, if this order is filled, it enters the second order for me, which are the conditions to get me out of the trade. What could be better? Because I can set up my trades through Think or Swim that will provide me a stop loss and my profit targets. And if you call them and get set up for their lower commission rates, depending on your size of account, options can trade for $1.50 a contract, and stock round trippers is $10. It's $5 each way. And you can call up and say, hey, I'm a friend of Dennis's. No, just you can call them and negotiate with them. Now, not all the trading platforms are like that. It's been slow. I traded Fidelity for over 20 plus years, about 25 years, and I got so tired of them because while they had this trading platform, it really wasn't designed for traders. and they would make no adjustments whatsoever to allow us to make good solid trading decisions. It was just Fidelity was more or less built for longer term trading. Okay, almost the buy and I won't say quite buy and hold, but you didn't have the flexibility to set up a conditional order to stop limits where if it drops below this price, I don't want to buy it. But if it's right in that sweet spot, that's where I want to buy it with a stop and a limit. But if it's above it, I don't want to buy it because their stop limit was just one price. Which to me, I'm sitting there going, well, what happens if it just kind of wiggles around there? But the other way gives me a little bit of a window. Like that a lot better. Remember, not all trading platforms are created equal, but it provides me the peace of mind. Peace of mind is very important when you're trading, simply because how do you go on vacation without sitting there constantly thinking about, oh gosh, what happens if? Or you go on vacation, you got some open positions, but you don't have any protection in place, and you've been gone for a week, and let's say you're somewhere where there's no internet availability, which is very few places these days, but let's say there's very little. And but you come back from vacation and went, whoops, that trade went against you. And a little bit of protection. And trust me, it is so much better to get stopped out with a 3 to 4% loss, because oftentimes if the price action proves the technical analysis wrong, it's not going to stop at 3 to 4%. Some of them take the big long ride. Whoosh. Reminds me of those old water closets back in the olden days that had the holding tank up above it. And when you pull the handle, it would go whoosh.
You get a good flush that way.
You do, but you have to stand up before you flush because it could be a rude awakening. Lyle was talking about recycling plastic bags. I think my mom recycled paper towels. Anyway, but that's another story. Wash it out. So, not all trading platforms are created equal. Learn the capabilities of yours. Nuts and bolts, conditional orders, especially you identify the stock or ETF you want to trade. And there are some folks who just say, I'm going to trade the spiders, SPY, or I'm going to trade IWM, or I'm going to trade the Qs. And they just stick with that. They recognize that the move isn't going to be that great, but it may move 1.5 to 2 to 3% per week or per month. And, that's okay. And if you're an option trader, you can really take good advantage of that, or you can kick it up to trade the leverage deals. Identify where you want to buy, sell, how much you're going to fudge. And fudging in this is okay, but you have to identify how much you're going to fudge. And what I mean by that is, let's say you're trading off of a moving average, the 8 or the 20-day moving average, and it's sitting at $20. And that in the past, it's come down and hit off that moving average, and so you say, well, I'm going to take whatever the moving average is right now, and that's where I'm going to put my entry trigger. Well, the little secret about moving averages, they don't settle until that trading period is over. So you can come in at the beginning of the day looking at a daily chart, and the moving average hasn't completed its fluctuations for the day, and that fluctuation may be, depending on the stock, maybe a dime, maybe 50 cents, maybe $1, maybe more. And so you have to sit there and factor in, what's my fudge factor? Is it going to be 50 cents above it, 50 cents below it, depending on whether you're entering to the upside or downside? And so learning how to do that takes a little bit of practice, but you have to decide, okay, I'm going to give it 50 cents. If price gets, I'm going to trade into the upside. If price gets within 50 cents of $20, get me into the trade. And then, and so that's the fudge factor you got to work at. Place your conditional orders to trigger on either strength or weakness. If I'm trading to the upside, the way I like my conditional orders to trigger is I want it to come down, and let's say I gave it that fudge factor of 50 cents. I want it to come down to $20.50 and go back up at least a dime. Because then what am I doing? I'm buying the rebound. Some people fade that. They'll say, well, I'm going to let it come to, now they'll just put their order in at 20.50. Well, sometimes it'll hit 20.50, then it hits 20, it hits 19.50, and goes, at least the other way. You're improving your probability of a bounce by going the other way. How much budget place your conditional orders? Automatically set your exit parameters. And one of the ways that I set my exit parameters, here's just some background on some of the studies that Mike Traeger and I have done. Our research has found that learning to trade off a specific moving average is going to lead to better entries and better entry consistency based on the objective entry. But it takes time. It takes doing your homework. We back tested off the 8-period moving average in all time frames, and it worked out very, very good. But then if you're not going to trade off the 8 to 20, call out the moving average you're going to be trading off of. A lot of people will trade off the 50-day moving average, and that's fine, but call it out. Say, okay, I'm going to take this trade off of the 50, and then just adjust your rules appropriately. I'd still maintain my 4% stop loss. I would still, my initial profit target would be somewhere between 5 and 10% to take off a little bit of the profit. But at least I'm calling. And that way, if I get a close below that 50-day moving average, that's my first clue that the particular trade may be going wrong. It's a clue. Do I want to take actions off of that? Maybe. I may say, if I get a close below the 50, I'm out. But clearly, my dead stop loss is 4%. So go to the chart. Okay, let's go define it. Here's a couple. This is Tesla. This is a 20-day. This is a daily chart. Clearly, it's bouncing off this support here at 240. Tesla pre-earnings, and this is for a pre-earning run. I wanted to pick it up somewhere around 240 to 241, but I had support in this range here. So then I could go. I went to the midsection, halfway between those two support levels. I said, if prices get to that, 242.26, I will buy on a rebound, bouncing back up above 242.50 or the 20-day moving average, which that is the 20-day moving average right there. And for the guys online, I'm talking about this line right there is a 20-day moving average. What I have going for me, one, great support, 241. If it closed below that level, the 240, 241 level, I'd say, the analysis isn't working out. I'm done. I'm out. Stop loss, 4% max, which put me down at 232.80, or $1 below 239, which is my support here. And so $1 down below 239, below 240, 239, and so I could basically take either one of those and still be within the rules that I trade by. My first target is 5 to 10%. Then I want a T2. I would hold that in an earnings-like trade like this until just prior to the earnings being announced. Tesla usually announces after hours. That day, I would exit the rest of my shares, I'd say, because I'm not going to hold it over earnings. Earnings is out here. And so since I don't want to sit there and figure it out myself, I developed this little spreadsheet that actually says, okay, how much am I going to invest in this? $14,000. It tells me exactly my planned entry level, 242. How many shares can I buy? 58. Now, I may not buy the odd lot. I may go to 55 or even go to 50, simply because it's a lot easier to get filled. But that's not as big a problem as it used to be in the old days, where people didn't like to fill odd lots. It's a lot easier to get filled. I think it's the electronic nature of our markets. It tells me exactly where's my 4% stop, 232.80. Where's my 5% profit? And so then if my first order gets filled here, my conditional order automatically issues the second order. That's my stop loss. That's my first target. I sell half of it. That's my next target, and that's my next target. And you can set every one of those up. Excuse me. And on 58 shares or 55 shares, it'll be a little bit more challenging to divide it in half. On something with that small of a number of shares, I would probably go half instead of, so I wouldn't worry about my T2 down here. I would just go T1 if I get 5%, which in this case on Tesla is a darn good little return, right? That's $12. I'll take that. $12, and Tesla tends to do $12 in a half hour. No, no. Typically, it's got an ATR that runs about $10 to $15 per week, which is that's a nice move on a $200 stock. So I buy 50 to 58 shares. Don't like God lots. Then I start building the trade from there. That's where I'm going to stop. However, the rest of these slides, which are bonus slides, define sell rules and mechanics of how to do the rest of it. I'm going to include when I post this to the website. But now I want to jump into and spend about 10 minutes taking a look at what I'm looking at trading for next week. Any questions on the conditional order type thing? And what you'll find through the rest of these slides is specifically some screenshots on putting the conditional orders in, what they look like after I do the conditional order, and so those are some good additional slides. Any questions online? Yes, ma'am.
It's still a little fuzzy to me, like you trigger, in the conditional orders, you trigger value, and then in that conditions, you usually have at or below some dollar value.
Sure.
I get the stop limit and
sure.
stop value, but it's still, like if I'm sitting and I find a trade, I'm still struggling with how do I figure out what that at or below value is.
Okay, cool. And that's partly the fudge factor I was talking about.
Yeah.
And and I'll give you a really easy answer.
Okay.
Pick a number. I mean, no, seriously. Pick a number, 25 cents, 20 cents, 50 cents, and just never change it.
Okay.
Is it going to work for you every time? What in life works for us every time? But the thing about it is what's cool about conditional orders is as soon as you're filled on the first order, your protection and your profit order immediately go in. And I make that one good till cancel. And then I'll go back and I'll relook at it. I do the same thing when I'm trading options. But I'm primarily using price action of the underlying stock for where I want out of my option, and that kind of stuff. And then that's why most of the stocks that I like to trade also have a very good option chain that goes with it. And so, great question. But part of the thing is just choose a number. I mean, and some people have a rule like if it's a stock that's less than $50, they'll use 20 cents. If it's a stock that's between 150, they may go up to 75 cents or 50 cents to $1. If it's a stock that is in excess of $200, you may have to look at a 1 to 2%, 1% of that level. So it may be $2 if it gets within $2 of that. But then I like to kind of like approach it from the aspect of I'll give it up to 50 cents. If it doesn't get hit, it doesn't get hit. And I'm perfectly fine with that. And that's something I had to teach myself because I didn't used to be fine with it, and I would wind up chasing, especially since I trade for a living. I'm around the market all day. But for folks who are working still, You want to be able to put your order in the morning or the night before, and then go to sleep, go to work. If it triggers, it triggers. If it doesn't, it doesn't. If it doesn't trigger, what are you going to do? No, we're not going to. I know you wouldn't do that, but some of the people Lyle was talking about in his presentation, they would sit there and do that. I'm glad you guys take me with a grain of salt sometime. What, Lyle?
No, I'm just saying, because sometimes with that, it's, I think we've all gotten where we go in this order and we missed it by, we didn't get filled by a penny or something like that. Okay?
Yeah.
So, and that can sometimes be a nightmare, because now we start making our fudge factor bigger, and or we make our stop. So it's almost easier just to say, you have to kind of find a sweet spot of, okay, where am I going to get it to where am I going to get filled most of the time, and it's not so tight you're going to get whipsawed all the time. But if you make your fudge factor so big, then it kind of defeats the purpose.
And that's one thing that I really like about the active trend, what I teach with the active trend trading, Joyce, is Mike and I have, one, traded this for a long time. Secondly, we've done a heck of a lot of back testing on it to come up with those parameters. And we know that it typically generates about a 60 to 70% win-loss ratio of winning trades versus losing trades. And matter of fact, when it starts to get outside those parameters while we're holding everything constant, we know that something's up with the market because it should function properly. Let's take a look at a particular potential trade for this week. And there we go. This is 6. It was interesting. We were watching two stocks over the last few weeks. One was 6 and the other was 5.
Well, because we used to do 3D, so we've gone to like 3 and then 4, and so we've gone 5 and now 6.
5 was a tricky little bugger that did that, and you just wanted to. This stock could cause somebody to say bad words.
Slam doors.
Yes, slam doors, break closets. Anyway, what it did was, but it did give some additional triggers. We got into it here, thinking it was going to bust back up to the 20 and 8-day moving average. It didn't. We got stopped out, and I lost my patience with it. I just was looking at other things, but then it went down, did another formation. One of the active trend trader members got in here, and then wrote it for all this. He wrote it for the majority of this ride here, and he had earnings here. So he jumped out about there. So, within a 7-day period, he picked up about 11%, which isn't too bad. Yeah, 11%. So that's 5. 5's not on the list this week.
We upgraded to 6.
We upgraded to 6.
Let's see if there's a 7.
That's your homework. See if there's a 7.
Yeah, find if there's a 7. So what are we looking at here? And how would we set up a potential trade here? Just taking a look at, I would go back to the rules and say, okay, what moving average is it holding? The yellow is the 50-day moving average. I've got a great level of support there at 57. So on this, Joyce, what I might do, where is my 50-day? And I'm very precise on this. I'll go up here and go to your 50. Where is it? 50, 50, 50. There it is. 57.41 is where my 50-day moving average is. I will pop over here. And let's say I want to trade this. I'm going to go to performance, simply because, there we go. I'm going to go here, and I can sit there, and I'd be glad to share these little, spreadsheets with you if you would like to have them. And let's say, I got to determine, I'm not that excited about this pattern per se, other than I know it is holding the 50. It's been holding it now for this level, this $57 level, it's been holding it now for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. So we think it's pretty good support? I think so. Now, I don't know if it's going to get all the way back down to the $57 level, but let's say, and it's not a big, huge mover, but if I take off from here, eventually this momentum is going to build, and it's likely to rocket ship back up here to 62. If it gets all the way from here back to the top of the top of the envelope, it'll be 10%. And so I consider, and I can design a trade, is I closed at 57.70. In this particular case, by judgment, because I've undercut it a couple of times here, I could just basically say, okay, what was the 50? 50 was at?
Moving average is your stop.
There you go. 50 was at 57.41 in this case. And so I could just sit there on this particular one and go, okay, I can do it one of two ways. I could play it back up through these moving averages, which would be a better shot, and that's where you could wait until you could get a close back above the 820. Then you can set up your trade. Or since this is bouncing down, I'm going to say, I like this at $57.25. And so what I can do is I can then go over here, and I'm going to add about a dime to that. And the reason I'm choosing 57.20 is because that's where these lower lows are. Okay, it held that support.
So this is for the buy?
This is for the buy.
Okay.
So,
one quick question is, where did you get this? Because a couple people online said it's not on the list that you sent out. Where did you find 6 as a potential candidate, I guess?
the six has been on the list, and I've been talking, it's been on the radar list for the last probably, I want to say 2 weeks, 3 weeks.
Thank you.
Domo arigato.
Mahalo.
Okay, so what was the number? You guys got to help me with. You got to remember the numbers. Where did we want in?
57.20, I think.
No, but that's our trigger. 57.25 will be. Was it 57?
57.25. That's the trigger.
I don't know. Are you sure? Yeah. Okay. I believe you. So anyway, we're doing 6, not 5. That's right. Okay. So 57, and let's say 57.25 is a trigger. I want to buy it if it pops back up above 57.35. We good with that? So my trigger here, I want to be in this trade at 57.35. And that'll magically now tell me how many shares I can buy, what my stop loss is. Now, how about, would somebody please just write that down for me? What the 5% profit is and the 10% profit. We good? Now I'm going to round down to 240 shares. Then we're going to put our order in. And then that's what we got to leave. Sorry about that. Well, let's go over here. Okay. 6. Good. Then I want to trade 6. How did I make that? There we go. Get this wide enough that we can see it here. So that's my initial, and what this is going to be is a first trigger sequence. So my first order here will trigger a sequence. How many shares can I buy? How many shares am I going to buy? 240? Here's where the fun starts. Okay, I want to use a stop limit. My stop limit will be, what I say, 57.35? Yes? Okay. And I'll give it a dime. I'll buy in that little window of a dime. 57.45. Got it? Now I can choose here to make this good till cancel, but I got to remember that I've got the trade on, so that's why it's important to review your orders every day. Or I can make it for a day order. And since this is the weekend, this will go in first thing Monday morning. So for this case, since I tend to occasionally forget things, I'm just going to make it a day order. And it'll only be good for Monday. What is going to trigger that order?
In case you didn't see that, you clicked on a little gear icon at the right side, just to make sure.
Yeah. In your order entry, there is a little, see that little gear? Okay, I trigger on that, and it takes me to my order rules. And now, what's the trigger that's going to activate this order? 6 is at or below 57.25. You got it. 57.25. So that part's done. So the way this order would work is if the price of the stock drops below 57.20 or at or below 57.25, it will turn around and buy it as it pops back up, because this is my stop, so it won't let me buy below 57.35, and here's my limit, and that's the max I want to pay for it. We're good? How are the guys online doing?
We're good.
Okay. Now, do I click confirm and send? It's a trick question.
No.
No! Why, Joyce?
Because you need a stop order.
That's right. And then that is so easy. I can just sit here and I can go a couple of ways. I can basically take this. I can say duplicate order or create opposite order, right? Now, in this particular case, I'm going to set them up half and half. So I'm going to sell 120. I'm going to set this to a market order, and you'll see why in a second. And I'm going to set up my second, because I want to protect all 240 shares. So it's a market order. Here, and I go back to my little gear. Okay. Now, for those who are watching, I'm going to change this over and make it a good till cancel order. Now, what is my 4% stop loss? You guys didn't write it down.
We wrote down the profit, but we didn't write down the stop.
Okay. Well, here, let's. Huh? Of course, when I'm doing this, that's why I have that little spreadsheet. 5506? Okay. 55.06. Stop loss. Good? So if I'm at or below that, it'll stop me out. Now I'm going to put that one in there first. Save. And what I'm going to do is I'm going to get rid of this one here for a second. Delete. Not the whole thing. Okay, good. I'm going to, since I have where my stop is on this one, 5506, I'm going to duplicate this order here. Duplicate. And I'm going to go back over here to my little gear. Right there. Now, what is my T1? 5%.
60-22.
Thank you. Is that 5%, Bruce?
That's 5%.
Okay.
You want 10%?
No, so that's fine. 60 what?
$60.20.
22 cents. And I don't round, I don't fudge. I go ahead right to the number, 62.42. Because what I find oftentimes that happens is it gives you a number that nobody else is shooting at. Because a lot of people tend to round to, well, I'll make it 60, or I'll make it $60.20, or I'll make it $60.30. Most people will fudge up, thinking that they are, the golden child that's going to get, of course it's going to run past what I predicted. No, I put it 60-22 because oftentimes the market makers will take it past it, but I want to get out of this on strength, right? Because I don't want to be left with it. So I saved that, and now my order's ready. How long did it take us to do that? Yeah. 5 minutes, 10 minutes? And the first few times you do that, talk yourself through it. Just so you can hear yourself. Don't depend on the voices that are going off in your head anyway.
This is being recorded, right?
Yes.
You go back and look at it again.
Yeah. Don't, because, our minds tend to play tricks on us. So if you just talk yourself through it, first I do A, B, C, and you say, I made my little box, a little table that shows me exactly how much I'm getting. And if you say the words out loud, you'll be less likely to transpose numbers. Trust me. Yeah, so anyway, so here's the order. My first order is buy 240 shares of 6 at between 57.35 and 57.45. Order condition, it triggers it at or below 57.25. Second order, sell 120 shares if I go below 55.06. That is just a pure stop loss. That's all it is. My third order, which will all trigger if I get filled on the original, sell 120 shares of 6 at market. If it first either drops below 55.06 or it's above 60.22. Now, and then it goes on to tell me how much it's going to cost me, what kind of, whether it's margin or not. And so this trade is ready to go. All I have to do is come over here and click send, and it's gone.
So you got like T1 and T2 in there?
You didn't actually enter the T2.
Good catch, Bruce.
Because I only see 120 and 120.
Why didn't I enter T2? Yes, Dorothy?
So there's room to grow and you can follow your rules.
Partly that, yes. Room to grow, follow my rules. On the initial part of the takeoff, when an aircraft takes off, the initial part of the takeoff, their first objective is to get to 10,000 feet. So then you can get your computers out of the boxes so you can get online when you're flying. The next target may be 35,000 feet, but that's going to take them 20 minutes to fly up that high. And what's during that first few minutes of flight, what's the worst thing that could happen? You hit the ground. You could blow up and hit the ground, but that's what you're protecting against. And so in a situation like this, I want to protect on that second half of the trade. I want to protect the whole trade at my stop loss, and I certainly want to protect, and so I'm much more likely to get to 10,000 feet a lot faster than I'll get to 35,000 feet.
Yeah.
Yeah? So take your 10,000 foot profit off, which is the 5% in this case. Yeah, Dave?
So number 2 should be minus 240 instead of minus 128.
Huh? No, because I protected the second 120 right down here. If it's below 55.06.
Oh, I thought that was...
That way, if the first one's triggered, say 5%.
It'll trigger both of them out.
Yeah, there's great.
And so...
And we're running out of time.
I know, we are out of time. And then that also protects me from my other. And what's really a pleasant surprise sometimes is you got this trade on, and for the stock gets good news for whatever reason. Once it gaps up, let's say it gaps up 7 or 8%. Is it going to sell it at $60.22 for me? No, it's going to sell above that. So it's and I can put this trade on, which I'm going to do, right? Any more questions on the trade? Yeah, Warren?
On the stop loss orders, it's all 120, 120.
Yeah.
It says open. It's like it's going short. Close.
That's what they call it. And this trade starts to open, and this is a sell to open trade. In other words, this second order that goes in as a stop loss, it's an opening order, but it's just going to sell what I already have.
Open means placed order.
Yeah.
Basically, as opposed to closing order.
In other words, as soon as the first order executes, it's closed, right? Yeah, open to buy, bam, I buy, that order is no longer. And what this does, then it triggers my two other orders. It opens them for my protection. Okay? Any other questions?
Did they find you use a market order on that sell rather than stop?
I don't use a market order simply because there are still some market makers who are out there who are watching and looking at what you have set up. Now, Thinkorswim says that they don't do that. They hold your orders in place and off the books, if you will. But I like doing it this way. One, good habit. And secondly, if you're trading another platform that doesn't provide the same convenience as Thinkorswim, it provides you the protection. Because let me tell you, when I send out orders for active trend trading and I say my stop loss is at, and I do my orders this way, you know what? All of a sudden I see all kinds of orders popping up on the screen right there at my number. And so, anyway, okay? Good stuff? Guys online okay?
Well, good.
And it's gone. And then I can basically go back over here, just real quick. How do I know it's gone? I look up here. I look up here. And there's the order we just placed. So, and I can do the same thing. There's a little couple of twists I have to do for the options, but not dramatically. I can still target the same thing. And I just estimate, use the option value estimator, theoretical value, to establish what I think my option would be worth at that amount. So I hope this helps. Nira?
Yep. I have a question.
Yes, sir.
You saved this as a template, right? You wanted to?
Yeah, I can send. I can send that. You mean a little table?
No, I mean like make a.
Oh yeah, you can actually save this order here as a template.
Right.
I don't particularly like to do that simply because the template leaves past numbers in it.
I was going to ask you whether you had a trick
Yeah.
not leave the past numbers.
Yeah, I do. I don't use it. Because I would rather work my way through it, talk my way through it. And again, if I'm setting orders up, this is why I focus typically on just a few stocks. Because it takes time to do this. If you're working full-time, you can probably do one of these, and we got to go. Any questions? Dorothy?
I was noticing when you did the review of the trade, it said your commission was $5. Did you negotiate that?
Yes.
Yeah.
Okay. And for everybody in my family.
Very good. Can we be in your family? Like you can call it the band family?
Yeah. These are all my children.
All in God?
You know, it's really funny. One of the things, and I'll close out with this, is one thing that's really funny is Lyle is talking about the psychology of trading and some of the things of where our attitudes about money come from. And my mom grew up in the Depression. She was the daughter of a sharecropper back in Arkansas. Very, very poor existence. Married my dad. He got her off the farm, brought her to California, and all that kind of stuff. Make a long story short, they did okay out here. It's a middle class family and all that kind of stuff. But her attitude about money, she brought with her from the Depression.
Right.
She brought with her from the Depression, and she's one of those where I would, trade for mom and dad as long as dad was alive. I did okay with his trading account. As soon as he passed away, though, she became so fearful. And so my thing on this, be very careful trading somebody else's money, especially if they are fearful, because as long as she had control of her money, I could never make money with her. So the way I saw that, I took her money away. No, she's to that point in time where she's kind of like transitioned. And I said, and the second time around, I said, do not ask me, how your accounts are doing. You will get your monthly amount that you need for living and all that kind of stuff, but don't ask me. Just pretend this money is gone. Because while she was constantly asking me, because she would call me, because my mom likes to get online, she would actually call Fidelity. She'd call Fidelity, and you know how your account can fluctuate, $50, $100, $200, $300 or more per month. I'm down $25 this month. What happened? No. So she doesn't do that anymore, and her account's doing a lot better. So with that, hey, God bless everybody. Thanks for supporting BAM. If you like the direction with the multiple presenters and this kind of hands-on kind of stuff, please make a comment on the BAM, and we will. My intention is just to keep us pushing. Okay.
What's happening in July?
So July will be
Webinar.
Right?
Yeah, we'll probably do a webinar in July. I'll be talking with Jim, Lyle, Dave. Big hand for Ken Smith there. Ken has taken over responsibilities, hopefully for at least a time period, for doing the goodies. And so, and Ashi's gone already, but she's taking care of that in the back. And of course, Jim and Lyle.
Shows up late, leaves early? That sounds like Ashi.
Yeah, it does sound like Ashi.
Who's the smart one in the room?
And he had all the money?
If you're online, I'm signing off. Have a good one, guys.